Hello, California and Florida. This is Arvin Talley with Elixir Mortgage Lending and wanted to cover stated income loans. Well, what is stated income loan? Let's start out with that. Stated, you do not have to state your income. That's the simplest way to put it. That means you could buy a primary residence in California or Florida. It will require a bigger down payment. So in most cases, you're gonna need 20 to 25% down in most cases. If you have very high credit score and strong financials, we might be able to get away with a little bit less, but most cases, no matter what, you will need 20%. And this is a loan designed for folks who do well. This loan doesn't do very well with folks who have below 680 FICO score or have liquidity on the tighter side. This works well with folks who have high credit scores, have liquidity. They can comfortably put the 20% down, or if they need to refinance, they have plenty of equity. And plenty of equity in most cases. If we were refinancing, we won't exceed 50 or 60% loan to value, and we can finance you with no income verification. So if you're retired, self-employed, and maybe should not show enough income on paper, or maybe not currently working at the moment but have high credit scores and liquidity in the bank, you can utilize this way of going. The rates on these type of loans generally run 2% or so higher than where conventional terms are. Remember, this is not a conventional loan. A stated loan is a higher risk loan to an investor, therefore they charge more for it. If you think about insurance and risk, since the fact is that they're not collecting income documentation for this type of loan, they consider that higher risk, but you still get a loan if you have the qualification of higher credit scores, liquidity, and are able to either pay the down payments or have the equity to do the refinance. But in exchange, you get a little bit higher rate. And in the case of those who are looking to maybe perhaps make a home purchase in this market and try and secure the property right away, or you are trying to get some money out fairly quickly, the process on something like this is a little bit faster than a conventional loan. Conventional loan, if you really push it hard, you can probably close it in 2 to 3 weeks. Most cases 2 to 3 weeks. And if in case whether appraisal delays or some delay happens within 30 days or less, they will close. These type of loans are even faster. The longest thing we have to really wait for is appraisal. Appraisal, if we're able to do it right when you send in your docs and it's submitted, we might be able to get it out of the first week. And then once we have that done and the report back, from there, within a week, we can close or less. If you have any questions regarding stated home loans in California and Florida, please reach out. There are other options which are, I wouldn't say stated, they're in the self-employed realm, whether you have high amount of liquidity. It's called asset depletion, where we can whether divide out whatever total savings you have by anywhere between 72 and 84 months. And if we can qualify you with that income, using basically what you have in savings or liquidity, we can qualify you with that. That's called asset depletion. We can do P&L, and that would be your CPA basically writing us a letter saying that you do have this type of income, even if it doesn't show up on taxes, on your final tax papers. Or if you are self-employed, you can also qualify with cash flow. So after deductions, you may have a much lower income because you're trying to make sure that you don't pay Uncle Sam as much, and so in order to be efficient, you do deductions. However, we could use your cash flow the last 12 or 24 months as a self-employed to get you in. All of these loans do require higher down payments or better equity position, but there are terms starting from 10 to 15% down payment, and most cases 20% down payment, or if you're refinancing, we can possibly go up to 80% loan to value. Most cases right now it's 50 to 60%, especially if there's a cash out involved. And these loans can get done for most of you who are self-employed or are retired, have large sums of savings or liquidity, but maybe on paper something is lacking. And this is a very good alternative option to conventional loans. Conventional loans have the best rates and the best terms. However, due to home prices, current interest rates, people taking on more debt than they did in the past, there are less number of people qualifying for conventional. We do offer conventional, it's not that we don't, but not as many candidates qualify today as they did 3, 4, 5 years ago. So things or the dynamic has shifted or it is changing. If you have any questions, feel free to reach out. Thank you.